Hello, everybody, and welcome to the Open eCry market update for the week of June 4th. My name is Toby Gennaro, and thanks for joining us. We'll be taking a look at the U.S. indices for the upcoming week and see where the markets are headed, and then we'll take a look at a few foreign currency pairs for the week. And so let's start out here with the S&P 500, the ES futures, and we'll take a look at some of the levels that we've been talking about here for the last couple of weeks. As you recall, this 1265 level is the one we've been anticipating on this most recent pullback in the markets. And really, as you recall, we put in a Fibonacci retracement here for a while. That's been this 62% retracement level right back from that most recent high. And so you can see how that couples really nicely again with that 1265 level. The next level down would be 1235 should we break this level. Either one of those levels is going to be satisfactory in terms of a pullback for this most recent run-up in the markets, and it would still be considered, really just a safe retracement and kind of a healthy move for the markets overall. But again, we have a lot of bad news coming out of Europe, so a lot of times, any type of trend change or trend reversal around these levels is going to be coupled with potentially some kind of newsworthy event. So we're not always going to be able to predict those accurately, so we want to take a look at just really what the technicals are telling us. And right now, just by looking at some of the indicators here, we have really no divergence at all on any of these indicators. Everything is converging nicely to the downside. One thing we do have is we have a lot of extension away from the moving averages, okay, both on the weekly chart as well as the daily chart, which tells us that more than likely in the near term we're going to get some kind of a snapback into the moving averages. Could happen here on the 480 chart and the 240 is where I'd be looking for some of our setups. I have a nice level in here right around at 1290 that if the market were to rally back up, we would put some of those trend flow candle setups right back up against that that backstop at that 1290 level. And then if you start to look for some of your trend flow candles to take that next leg lower, we can start to see where that bottoming structure might start to set up. So if we got to move back up into some of these moving averages and then a rollover, we might start to see some divergence setting up on some of these higher time frames, which will at least give us an indication that the trend is weakening to some extent. But on a lot of these strong trends moving up or down, we're going to see the market continue to diverge and diverge and diverge until we actually get some newsworthy events that are going to cause this market to move higher. So it's going to be a combination of a number of things, both technical as well as fundamental. It's typically the way these things work. But let's take a look at the YM and see where the Dow is at and what some of the similarities or the differences might be. And so looking at the Dow, we have another couple of levels here. Again, we were looking at that 12,000 level where we had a number of touches going all the way back to 2011. And then just recently toward the end of last year, that was a pretty significant level right around 12,060. So really at the exact same place as we are on the ES. And so it really depends on what's going to happen here. We really have the same exact thing. We have a lot of extension on the moving averages here. Everything is converging down on the indicators very nicely, so there's really no reason to begin getting long. More than likely, we are probably going to get some kind of a bounce here back up into the moving averages again on the 480 and the 240. And then you can start to look at some of your levels here on the Dow right around that 12,300 level, and you can see that a little better right here on the 240-minute chart. So any rallies coming back up into these sell zones are more than likely going to be shorted again. You're going to see the sellers come in with their orders at that point. So that's what the indices are looking like for the week. And here on the pound dollar, let's take a look at a key level that's coming into play if you're trading this pair. Just looking at the weekly chart, we're down on, not even our third touch. This actually goes back quite a ways at this 153 level. We had some touches back here at the beginning of this year, toward the fall of last year, back toward the end of 2010, and even beyond. This goes back quite a ways, even back to the beginning of 2010. So pretty significant level there with a number of different touches. I want to see if we're actually going to break this level. Don't think that we are. If you look at the U.S. dollar index, it's showing some signs of a weakening dollar, at least short term. So we'd be anticipating, based on that information, maybe a move back up into at least the moving averages here, or back up into some of these upper limits right around this 1.6 level. So even though we have on some of the lower time frames, it looks like you're getting some setup trend flow candles looking to go short. Don't necessarily want to be going short with this major support level right in the way of any potential targets below 153. So be careful about that, and good time to be cautious on the pound dollar. Be looking to get short once we get potentially a move back up into some of these levels like 156, 158, and then get those levels drawn in your charts. Then you can start looking for some of the trend flow candles to get short the pound dollar again once some of that dollar weakness has played out. And looking here at our final currency pairing, the euro dollar, we can see by looking at some of the higher time frames here, the weekly chart, it's been in really an extended downtrend here for quite some time. Everything's looking really good on this downtrend across all the time frames. On the weekly chart, we just put in a new low last week. So we have, again, lower highs, lower lows, lower high here, again another lower low from last week, and we're coming up into a couple of levels here. This 124, 125 level has been in existence for quite a while, so we might be getting a little bit of a bounce off of here back up into the moving averages to then just continue this trend lower. If you look at the dollar index, you'll see that the dollar index has been on a real tear the last 6 weeks. It's been incredibly bullish, which has had its effect, as you can see right here on this pairing, which has been literally just the opposite. So we've been pushing this pairing down lower. The dollar index is looking to come into some resistance up around the 84 level, so you want to be paying attention to that. And if we do get a pullback on the U.S. dollar off of that 84 level, that would mean some bullishness then for this pairing, which would potentially push us back up into the moving averages, back up into some of these levels. And then if you look at some of these levels on the daily chart, that would put us 128 would put us right back to the 50% retracement of this move right here, and it would put us right back into the sell zone on the daily charts. You can start looking for some of those trend flow candles and those setup candles to then go short and continue this trend to the downside on this particular pairing. On some of the intermediate time frames like the 480 and the 240, I wouldn't be looking at those as much for trend flow setups. I'd be looking for really a larger move and then paying attention to the dollar index to see where that's going to go up around that resistance level at 84 would be the level that you want to pay attention to, and then start to look for your setup candles here on the euro dollar. So that's the outlook and the setup for euro dollar in the upcoming week. So good trading to y'all in the week ahead, and we thank you for watching the Open eCry market commentary for the week of June 4th. We'll see you next week.